Hello, welcome back to Boni's Life, the channel where we dissect the complexities of the financial world and empower you with knowledge that transcends the headlines. This is your 2025 Year in Review series, and today we are diving deep into the turbulent waters of the cryptocurrency market as it behaved in April 2025. April was a month of contradiction, a tale of two markets, really. On one hand, we witnessed the institutional embrace of Bitcoin solidify. And on the other, we saw the speculative froth in the altcoin market evaporate. So buckle up, because we are about to unravel the intricate tapestry of events that shaped the crypto landscape in April 2025. April 2025 will be remembered as a pivotal month for the cryptocurrency market, a period that starkly highlighted the growing divergence between Bitcoin and the broader altcoin space. While the mainstream financial media was preoccupied with the escalating tariff tensions between the United States and China, the digital asset class was undergoing a fundamental repricing. The month opened with a palpable sense of unease, as the market was still reeling from the aftershocks of the March downturn. However, what unfolded was a fascinating narrative of resilience, institutional conviction, and a brutal but necessary market cleansing. For the discerning investor, April offered a masterclass in risk management and the importance of a thesis-driven investment strategy. It was a month that separated the signal from the noise, and for those who were paying close attention, the opportunities were abundant. To truly understand the dynamics of April 2025, we must first look at the macroeconomic backdrop. The global financial markets were on edge, primarily due to the escalating trade war between the two largest economies in the world. On April 7th, China announced a significant escalation, raising tariffs on a wide range of U.S. imports from 84% to a staggering 125%, effective April 12th. This move sent shockwaves across all asset classes, and the crypto market was no exception. In the immediate aftermath, we saw a sharp sell-off, with Bitcoin's price tumbling by 500 basis points relative to the stock market on that day alone. This initial reaction was a classic flight to safety, with investors shedding risk assets across the board. The VIX index, a measure of market volatility, surged, and the crypto market, which is often perceived as the riskiest of risk assets, bore the brunt of the initial panic. However, the narrative quickly began to shift. While the initial reaction was one of fear, a more nuanced picture emerged as the month progressed. The U.S. Federal Reserve, in its April meeting, decided to maintain its benchmark interest rate in the 4.25% to 4.50% range, a level it had held since December of the previous year. Fed Chair Jerome Powell adopted a wait-and-see approach, signaling to the market that the central bank was not in a hurry to either raise or lower rates. This provided a degree of stability to the markets as it removed the immediate threat of a hawkish pivot from the Fed. Inflation, while still above the Fed's 2% target, was showing signs of moderating, and the economic data pointed to a resilient economy with a balanced labor market. This created a Goldilocks scenario for some investors, where the economy was not too hot to warrant a rate hike, but not too cold to signal a recession. This backdrop of monetary policy stability provided a crucial support level for risk assets, including cryptocurrencies. Now, let's turn our attention to the star of the show in April, Bitcoin. After the initial tariff-induced dip, which saw Bitcoin's price briefly touch a low of around $74,500, a remarkable recovery began. By the end of the month, Bitcoin had not only erased all of its losses, but had surged to the mid-$90,000 range, marking a monthly gain of over 13%. This made April the best-performing month for Bitcoin in 2025. The resilience of Bitcoin in the face of macroeconomic uncertainty was a testament to the strengthening narrative of Bitcoin as a sovereign, uncorrelated store of value asset. While the correlation between Bitcoin and the S&P 500 did see a brief spike in the immediate aftermath of the tariff announcement, it quickly began to decouple. In fact, over the course of the month, the volatility of the S&P 500 and the Nasdaq doubled, while Bitcoin's volatility actually decreased by 4%. This is a powerful data point that suggests that investors are increasingly viewing Bitcoin not as a speculative risk-on asset, but as a safe haven asset, a digital gold for the 21st century. So, what was the driving force behind Bitcoin's impressive performance? The answer lies in the unwavering conviction of institutional investors. Throughout April, we witnessed a relentless wave of corporate and institutional accumulation of Bitcoin. MicroStrategy, a company that has become synonymous with a corporate Bitcoin strategy, added another 25,400 Bitcoin to its treasury. Galaxy Digital, a leading digital asset financial services firm, acquired 31,500 BTC. We also saw smaller but equally significant purchases from companies like MetaPlanet and Semler Scientific. In addition to direct corporate buying, we saw a significant inflow of capital into Bitcoin-focused investment products, with ETFs and other funds adding a combined 29,000 BTC to their holdings. This institutional demand created a powerful supply and demand imbalance, which, coupled with the upcoming Bitcoin halving, created a perfect storm for a price surge. Now, let's shift our focus to the other side of the crypto market, the altcoin space. The picture here was far less rosy. While Bitcoin was soaring to new heights, the majority of altcoins were struggling to stay afloat. The Market Vector Smart Contract Leaders Index, a benchmark for the top smart contract platforms, recovered only 19% of its losses from the December to April drawdown. Ethereum, the second largest cryptocurrency by market capitalization, was a major underperformer, declining by 5% in April. This divergence between Bitcoin and the altcoin market is a classic sign of a market that is maturing. In the early days of the crypto market, all assets tended to move in lockstep, with Bitcoin's price action dictating the direction of the entire market. However, as the market has evolved, we are seeing a growing differentiation between different assets, with investors becoming more discerning and thesis-driven in their investment decisions. So, why did the altcoin market struggle so much in April? There are a few key factors at play here. First, the speculative fatigue that had been building up in the market for several months finally reached a breaking point. The easy money that had been made in the altcoin market in 2024 was no longer available, and the retail investors who had been chasing quick profits were getting washed out. Second, we saw a number of large token unlocks in April, which increased the circulating supply of several major altcoins and put downward pressure on their prices. Finally, the institutional capital that was flowing into the crypto market was almost exclusively focused on Bitcoin. The institutional investors who were entering the space were not interested in the latest meme coin or DeFi protocol. They were interested in Bitcoin as a long-term store of value. This created a liquidity vacuum in the altcoin market, with a lack of new capital coming in to absorb the selling pressure. However, it's important to note that not all altcoins were in the red in April. There were a few notable exceptions that managed to buck the trend and post impressive gains. Sui, a Layer 1 blockchain platform, surged by over 52% in April, driven by the hype surrounding its annual Basecamp conference. Stacks, a Bitcoin Layer 2 solution, gained 22% on the back of an endorsement from BitGo for its SBTC initiative. And Solana, a high-performance blockchain platform, rose by 16% as several firms announced plans to build treasury strategies on top of its network. These examples highlight the importance of a research-driven approach to altcoin investing. While the broader altcoin market was struggling, there were still pockets of strength for those who were willing to do their homework and identify the projects with strong fundamentals and a clear value proposition. Now let's get to the part you've all been waiting for, the investment scenario. If you had invested $100 in a spot position at the beginning of April, what would your returns have looked like? Let's start with Bitcoin. If you had bought $100 worth of Bitcoin on April 1st at a price of around $79,235, you would have acquired approximately 0.001262 BTC. If you had held that Bitcoin until the end of the month, when the price was around $95,000, your investment would have been worth approximately $119.89, a gain of nearly 20%. Not bad for a month's work. Now, let's look at Ethereum. If you had invested that same $100 in Ethereum on April 1st at a price of around $1,555, you would have acquired approximately 0.0643 ETH. If you had held that Ethereum until the end of the month, when the price was around $1,480, your investment would have been worth approximately $95.16, a loss of nearly 5%. This stark contrast in performance between Bitcoin and Ethereum in April highlights the importance of asset selection in the crypto market. It's not enough to just be bullish on crypto, you need to be bullish on the right crypto. Finally, let's consider a more speculative altcoin play. If you had invested your $100 in SUI at the beginning of April at a price of around $2, you would have acquired 50 SUI. If you had held that SUI until the end of the month, when the price was around $3.04, your investment would have been worth $152, a whopping 52% gain. This illustrates the high-risk, high-reward nature of altcoin investing. While the potential for outsized returns is there, the risk of significant losses is also very real. So, what are the key takeaways from April 2025? First and foremost, the institutional adoption of Bitcoin is not just a narrative, it's a reality. The relentless buying pressure from corporations and institutional investors is creating a powerful tailwind for Bitcoin's price. Second, the altcoin market is undergoing a much-needed correction. The speculative froth is being washed out, and only the projects with strong fundamentals and a clear use case will survive in the long run. Third, the crypto market is becoming increasingly sophisticated. The days of blind, indiscriminate buying are over. Investors are becoming more discerning, and they are demanding a clear and compelling investment thesis before they are willing to part with their capital. As we look ahead to the rest of 2025, the trends that we saw in April are likely to continue. We expect to see a further strengthening of the Bitcoin dominance as more institutional capital flows into the space. We also expect to see a continued shakeout in the altcoin market, with a flight to quality and a focus on projects with real-world utility. The crypto market is no longer a playground for retail speculators. It's a serious asset class that is attracting the attention of the world's largest and most sophisticated investors. And for those who are willing to do the work and approach the market with a long-term, thesis-driven perspective, the opportunities are greater than ever before. And that's a wrap for our April 2025 crypto market review. I hope you found this analysis insightful and that it has helped you to better understand the complex dynamics of this fascinating market. As always, do your own research and never invest more than you can afford to lose. Join me next time as we continue our journey through the 2025 financial landscape. Until then, stay curious, stay informed, and stay profitable.